Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to Forecast Update Live, a monthly show from Everag Insights where we gather to discuss our dairy market forecast. I'm Phil Plord, substituting this month for our regular host John Spainhauer, who is on assignment. Joining me today, we're excited to have two top analysts from the Insights team. First, Matt Gould, who's back from assignment, and Erica Medke. To get us started, Erica, what changes, if any, are we seeing to the Everag Insights forecast this month?
Hi, Phil. Thanks for having me. I would say that there's been some pretty notable changes for our forecast this month, and everything is lower. So especially as you look at the class 3 and class 4 prices from a dairy producer perspective, it's multiple dollars in many cases that we are seeing decreases. So all of the baseline commodities are lower for longer than we have been in previous forecasts.
So we kind of kick the can down the road, right?
Very much so.
All right, Matt. The past couple of months, Erica has had what I believe to be the easier job of presenting the bearish perspective on things, but we're going to make her do the bull side this month. How about you give us the bearish arguments?
Yeah, I don't know if you could say easier or just more right. The reality is that in our conversations, we are hearing about the worst demand environment in years. Increasingly, we're making references to 2009 in terms of demand. And part of the reason why we lowered our forecast this month, or maybe in large part why we lowered our forecast this month, is all related to demand. We're seeing cracks everywhere. At the retail sector, consumers are trading down and away from dairy. And then at the food service sector, we're hearing about cuts to suppliers for similar reasons. So when it comes to domestic demand, there's not really a bright spot today. And from our perspective, this appears to be more of the new normal. And the why behind it, I think, is probably pretty clear. Consumers have run out of money. So that isn't something that we expect to change tomorrow or a week from now. Certainly the demand situation is worse than we had previously expected. And then there's exports. Our futures curve has been priced at this big premium, and we haven't been able to yet book, at least we're not aware of, a big clip of exports to help balance the situation. So on one hand, you have this really tepid or struggling domestic demand environment. And on the other hand, our relief valve hasn't yet fired.
Yeah, and it doesn't really take much, right? I mean, if exports are down 10 million pounds, 20 million pounds a month, it's not as though the domestic demand situation is, well, we'll just take that cheese on, right? I mean, it's a big problem.
Yeah, exactly. And, the price of cheese in this country is set by the last load. Then there's the supply side of the situation. We haven't yet seen the signal to suggest that supplies have fallen off. Actually, quite the opposite. Milk is at huge discounts in the Midwest, unusually so. And so that's the other conversation in our shop is how long will it take for milk supplies to shut off in a big way? And it hasn't happened yet. And I think, to use your analogy, kicking the can, it appears as an industry, we're kicking that can of slowing production down the road.
Erica, what's the bullish argument?
Well, I will say it is still fairly lonely over here in bull land, but I think we've got a little more support now when we've got prices as low as they are today. So, many times we've talked, the cure for low prices is low prices. You will see both supply and demand responses. On the supply side of things, we watch slaughter data very closely. The last 2 weeks, we've seen dairy cow slaughter, not just at the 5-year average, but at the 5-year maximum. So dairy producers are getting the message that this is painful and we need less supply. On the demand side of things, we've heard about some folks kind of destocking their supply chain. They recognize that the demand is down a little bit. There is a short-term push to clear out a little bit of inventory. That is short-term. They will come back to a normal buying pattern. Additionally, we are seeing some additional promotions. So USDA is showing some data indicating that promotions are increasing at the retail shelf as well as prices are a little bit lower. That will stimulate demand, especially in this very inflationary food environment. As consumers are shopping for value, cheese and other dairy products will become relatively more affordable and move some more product on the shelf. And then finally, overall price levels are very attractive. So as we look internationally, U.S. cheese, U.S. powder, definitely a clear favorite there.
Yeah, I mean, I don't think anybody here has lost faith in the axiom that low prices cure low prices. I think the gazillion dollar question is when, right?
When.
And
exactly.
how much pain on the supply side, how much encouragement on the demand side. And what Matt says is a very tricky demand side environment to figure it all out in. Thanks, guys, for that look at the forecast. Each month, we like to feature our favorite look, a page that we put in our forecast update publication. This month, we're looking at how drought unfolded pretty quickly across key growing regions in the United States in the month of June. Dry weather helped the corn crop get in early. That was great. But then the dry weather persisted throughout the month of June. But when the rain stopped, we started to see some real questions emerge about the prospects for the crop in the absence of meaningful moisture. The graph we're using this month shows how the drought situation in the month of June 2023 was the most acute that we've seen since the Drought Monitor started publishing historical data, and that includes 2012, which turned out to be a pretty bad crop year. Now, over the latter part of June, it started raining a little bit. July, there's weather in the forecast. The price of corn has gone down $1 on new crop over the past 10 days, very volatile environment. So maybe the situation is curing itself, but the early season drought, kind of a fascinating thing to watch unfold. And one of the cool things is that on our EverAg Insights portal, we have a new web exclusive Thursday drought map and graph festival. Every Thursday, we're publishing new charts and maps that show how the drought situation is impacting corn, soybean, dairy regions across the country. So go to insights.ever.ag for a look at that. That will do it for this month's episode of Forecast Update Live. Thanks to Matt and Erica. Thanks to everyone on the Insights team for their work on the forecast. And thanks to you, the viewers, for tuning in. If you don't receive our forecast update and would like to subscribe, please reach out via email at insights@ever.ag. And if you like this video, be sure to subscribe to our YouTube channel, give us a thumbs up, and share us with a friend. We'll see you next month for another edition of Forecast Update Live.